Another Monday, another sell-off in the middle of the growing season. The soy complex led the way to the downside early in the session, but corn and wheat were very willing followers in this downdraft. Livestock trade was mixed, but mostly sideways as the markets looked for direction from cash.
Live! The leaves are rolling! Via Farm Journal Studios, this is AgriTalk. This afternoon, we begin with a conversation with Rich Nelson from Allendale. Later, it's Cary Artac from Artac Advisory and wickedstocks.com. Directly following the news, Jack Scoville from the Price Futures Group. I'm a handsome newsman, Davis Michelson. Now, welcome the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much, and welcome to AgriTalk, everyone. I'm Chip. That's Davis. Big Apple Joe is behind the screen and making sure that we get out on the air. The events in Milwaukee at the Republican National Convention are getting started, and and things are moving forward. The reason I bring this up is because we had Ambassador Kip Tom on the show this morning. He was at the Trump rally on Saturday when the attempt was made to take former President Trump's life. We got Ambassador Tom's story, his perspectives on what took place. If you did not get a chance to hear that conversation, you should. Go to your podcast platform, go to the AgriTalk app, go to agritalk.com, and you can listen to it there.
Excellent. Yeah, it's absolutely worth a listen, for sure.
Oh, yeah. Yeah, the whole thing has still got me a little freaked out, man.
Well, me too. There's a lot that I could say, and I'm not going to say any of it. You know what I mean?
Yeah.
But you, okay. So you started with, and we're covering events in Milwaukee today. I thought, well, now what's happened in Milwaukee today?
Oh,
you know? I'm just like on a...
Sorry about that.
Well, it's okay. It is probably just me. I can be a little sensitive sometimes. But
No,
I know exactly
you're
what
okay.
you mean, man. It's like, what next?
Yeah. That's exactly right. What's next is some more heat this afternoon.
Evidently, yeah. Let's
Holy
talk about
smokes. That. I hear they're rolling up. Are they okay?
Yeah. No, they are not okay. They are upset and rolled up my flowers all around the grounds here at the Institute. They're just tightly rolled. They'll be fine. We got some cooler weather.
Will be.
Coming. I do too.
I hope they'll be okay.
Otherwise, handsome
Rich Nelson.
newsman. Yeah, we got him from Allendale today.
Yep, Rich Nelson on the show today. We're going to get his perspective on last week's WASDE, the supply and demand report, and of course we'll take a look forward and see what Rich expects in the future. Yeah. And then Cary Artac, Artac Advisory, wickedstocks.com. Stocks are at new highs today, all-time highs, chugging along. We'll get Cary's take on what's going on there. All right, let's get to it. Yeah. What do you got in the news?
You bet, Chip. Global crop watchers are growing more concerned about the potential of the wheat crop in Russia, Ukraine, and Kazakhstan. But the market wanted nothing to do with crop concerns today. The U.S. dollar index found support at the 104 level and bounced today, helping to put the commodity world on the defensive. Export inspections of wheat in the weekend of July 11 totaled nearly 534,000 metric tons, and that topped trade expectations. However, it failed to provide support for wheat prices. December soft red winter wheat futures opened a tick higher in on-session highs and then fell to new contract lows on follow-through selling from Friday's price pressure. The session low close will keep sellers in charge of the market when it reopens tonight. December HRW wheat futures 14 1/4 cents lower, 5.72 1/4. December SRW wheat slipped 19 1/4 cents to 5.56 1/2. September spring wheat closed at 5.80 3/4. That's down 16 3/4 cents, Chip.
It was a good day for wheat market bears, no question about it. They built up the downside momentum in there.
Corn futures saw relatively light selling pressure at mid-morning, but drifted lower throughout the session. December corn opened slightly higher, but on-session highs and closed on-session lows while posting an inside trading day. Export inspections of corn in the weekend of July 11 totaled 1.08 million metric tons. That was at the high end of trade expectations. The lack of an upcoming threat to the U.S. corn crop has chased buyers away and has given speculators the courage to stay on the short side of the market. September corn futures were 11.5 cents lower at 3.90 December corn softened to 10.5 cents to 4.04 1/4. March corn futures closed at 4.17 3/4. That's down 10 1/4 on the day, Chip.
Yeah, good demand, but the weather forecast has got the corn on defensive.
Well, export inspections of soybeans in the weekend of July 11 totaled less than 169,000 metric tons. That was short of trade expectations, but likely had little to do with today's sell-off. Members of the National Oilseed Processors Association reported they crushed 177.9 million bushels of beans in June, about 2.3 million bushels below the average pre-report trade guess, but was still a record crush pace for June, up 3.1% from May and up 7.8% from a year ago. Soybean oil stocks were down 4% from a year ago. The lack of a weather threat to the bean crop also pulled bean prices lower today. Novi beans gapped lower, rallied to fill the gap, and then fell back to post a contract low and to settle on session lows. August beans 27 cents lower, 10.78. September declined 24 3/4 cents to 10.33 3/4. November beans closed at 10.40, down 25 1/4. Chip.
Yeah, August bean meal down $5 a ton today, and August soybean oil down just 23 points. So a little pressure from the products there as well. We'll get to the rest of the markets when we come back. First, let's get in Jack Scoville, Price Futures Group. Jack, here we are, another Monday morning and another sell-off in these grains. It's starting to look like the shampoo bottle, isn't it?
Yeah, it's getting pretty ugly out there. It really is. And, it's supply and demand. Right now, we think supplies are looking very, very good out there, and they probably are. At least generally they are. I'm sure that, we know that there's pockets of problems, especially up north in Minnesota, for example, and northern Iowa, where the soybeans especially have had trouble getting established because of all the rain. And then until recently, it's been very dry south and east of Chicago, but those areas got some very beneficial rains in the last week. And then the demand side is in question as well. We saw the NOPA crush data, and there's this little question of Donald Trump getting shot at over the weekend, which I think roiled the markets just generally here today, especially in the grains. Especially in the grains, because if he does become president, we're gonna think a lot more about tariffs and China rhetoric, and none of those are good for agricultural producers.
Yeah. It is interesting to see the reaction in the commodities versus the reaction that we saw in equities today. The Dow's up 300 points, and the buyers couldn't get enough of what's going on in the stocks, but they wanted nothing to do with the commodities. It was a little surprising to me, Jack.
Well, a little bit, but if you're going to have tariffs, supposedly they're designed to support American business, and maybe they will, but they will cut exports, and we in agriculture, we need our exports.
Yes, we do. Yes, we do. All right, Jack, good stuff. Thank you, buddy. We'll talk to you later.
Okay, great.
All right, Jack Scoville, Price Futures Group. Rich Nelson, Chief Strategist, Allendale, is next.
We don't make the news, we render it. AgriTalk.
All right, welcome back to AgriTalk. I'm your host, Chip Flory. Got Davis Michelson with me. You got that? You got that breaking news handy?
Yes. Beep, 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 beep. This, according to AP and Politico and other sources, former President Donald Trump taps J.D. Vance to be his running mate. Chip?
Ohio Senator J.D. Vance.
Mm-hmm.
His stock really rose over the last, 3 months even? He was a big, obviously was a big supporter of former President Trump, and was even appearing on news shows as kind of a proxy for President Trump. And now it looks like he's been tapped to be the running mate for President Trump this fall. Wow.
Yeah.
Real quick, why don't you go ahead and hit us with those closes that we
I'll
missed.
go way fast. December cotton, 117 points higher, 72.44. August fat cattle today, 25 cents lower, 182.12.5. August feeder futures, 12.5 higher, 258.77.5. And August lean hog futures, 2.5 cents lower, 88.42.5. Nothing to see here, Chip.
Right, not a whole lot to see there at all. All right, thank you, Davis. Rich Nelson is the chief strategist at Allendale Inc. He is our guest analyst today. Rich, it's good to talk with you again. How are you?
I'm doing fantastic. Of course, like a little different market to play with, but certainly as far as us over here, very happy to talk with you guys.
All right. Another Monday, more pressure, another down day in the grains. Now, in the past few weeks, it's felt like the pressure was because we came out of the weekend and we were looking at a forecast with no major red flags for the crop concerns. Now, Jack was saying, maybe after what happened this past weekend with the attempted assassination of Trump, that if the odds are now higher, that we will see President Trump back in the White House, that it may raise the potential for some trade conflicts over the next 4 years ahead. What are your thoughts there, Rich?
So I think this is a good transition point for saying, according to our numbers as far as balance sheet numbers, we actually have hit downside targets where corn and soybean futures need to go. Now we're raising some other additional psychological issues, which are moderately valid. Keep in mind, the first 2 years of that trade war, we dropped soybean exports from prior years 28 to 36 million tons. We had 2 years at 13 and 16. So I'm not at all going to say they're going to have a massive trade war, but from the trade standpoint, a psychological discount is now being seen in this market here.
Okay. And even from corn's point of view on this, Rich, because the Trump appointees at EPA weren't doing ethanol any favors. Is that a fair statement?
Certainly true.
Yeah. Boy, this is it's a crazy, weird time that we are in there. Trying to figure out exactly what all this means for the markets going forward is going to be tough. But then the equities turn around and they're seeing a heck of a good day today, and it's got to be because of the pro-business potential of President Trump, just not helping out agriculture all that much. Okay, let's go to the WASDE report that we got on Friday. Rich, what was it that stood out from you? What really caught your attention?
So immediate issue, and I actually wasn't surprised, or I was surprised about this, but later maybe it does kind of work out right. USDA really popped us up for corn feed residual usage for both old crop and new crop. Combined, they added 150 million bushels to usage, offsetting a good portion of that supply increase they gave us due to the higher acreage. So that's a positive, and I did not expect to see that on this report. Other areas, moderate points of concern. I can't argue with the soybean issues. Maybe on the soybean side for the new crop, you could argue they should start addressing some concerns on new crop export sales, but they chose not to on this report here.
Right. On the old crop corn balance sheet, they also increased that export estimate by 75 million bushels. Did that make sense to you?
It did. The only surprise was that they were so aggressive. We had plus 25, and we expected a few more months where they would just piece together these additional increases. One positive thing for corn, which is different than soybeans, is even though USDA gave us a full 75 million bushels on the corn side for exports, it's probably not enough. You can probably still argue a little bit more ahead in these next month or two.
Okay. Well, there's not a whole lot of time left. If they're going to, if they're going to make the move, they probably better get it going in either the August or heck, by the time we get the September S&D report, the marketing year will be over for old crop corn. If they're going to make a move, they're going to have to do it next month, aren't they?
Yes. And you could argue that maybe they chose to kind of leave a little on the table, waiting to see what they would do with yields and maybe make a moderate adjustment based on that. But, yeah, it is time running out, certainly to address the old crop issues on exports here. Certainly true.
Geez, I tell you, it's hard to believe that we're getting that close to the end of the marketing year already, but here we are. 181, the trendline yield in there for corn. Made no adjustments. There were plenty of challenges during the planting season in some areas. Obviously, there are people that are wondering how in the heck didn't they make some adjustments on that trend line yield. What are your thoughts on it?
So going into that report, I would say that they were correct in standing aside with the idea maybe we're a little higher, maybe a little lower. With the current forecast, though, moving to below normal temperatures over the next couple of weeks for much of the east, parts of the west, this does give us a separate issue because this is a major factor in determining strong yield gains. So as it stands right now, we're just playing with the idea that the east is offsetting the west. So we are at trend yields. We're not yet ready to push them higher or lower here from that standpoint, though.
Okay. What are your thoughts where that might end up?
I've got to keep in mind these past 8 years have been different than prior years. Weather hits do not give us the same hit as we once had just 15 years ago. So I'm almost secretly saying on soybeans, in my personal viewpoint, we probably will end lightly above trend yields. Corn probably steady at trend yields, but heck, when the combines roll, maybe they might be a bushel or two higher. So I'm going to keep that in the back of my pocket, though, before getting too excited here.
Okay. All right. And, the thing is, last year we had a record yield and it was below trend line. This year, it feels different to me, Rich. It feels like if we don't at least hit trend line, it's going to be a disappointment to a lot of people that are sitting on the short side of this corn market, won't it?
And that's true. And I will certainly say that story, especially for corn. The more we're playing with these export numbers here and saying, are we really, USDA is at 1.9 for old crop stocks. I'm kind of close to 1.8. So I think that's a story right there. If we don't hit that trend yield, and let's say August, September, we learn those acreage numbers are not there in the West, maybe prevented plant, et cetera, maybe we can have a different argument showing up, especially for corn than soybeans here.
Okay. All right. Yeah. You know what? We need to talk a little bit more about soybeans when we come back from the break. And there's a couple of other issues that I want to get to as well. But I don't want to fail to mention this. You've got your summer conference coming up very soon, don't you?
That sure is right. Next Tuesday on the 23rd, we'll cover full updated views on corn, soybeans, wheat, cattle, hogs. This covers 6-month price outlooks as well as marketing recommendations. So that's next Tuesday. Looking forward to having a good deal of interest and information.
July 23rd. Looks like you're going to have Drew Lerner from World Weather Inc.
That sure is right. And he's been our favorite long-term meteorologist probably for 20-something years is what I'm going to say. So we'll certainly see his latest updates, especially with these discussions about La Nina as we go into fall and winter up ahead here.
Yeah, no doubt. No doubt. Yeah, the guys at Pro Farmer use Drew as well on a lot of most of the time when they're doing their longer-term outlooks, they're relying on what Drew is telling them. So, all right, we are in the middle of a conversation with Rich Nelson, Chief Strategist at Allendale Inc. When we come back, we got to talk about the soybean balance sheet a little bit more, talk about that supply side of the 2024-25 supply and demand. We're talking with Rich Nelson here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where December hard red winter wheat futures were 14 1/4 cents lower at 5.72 1/4. December SRW wheat slipped 19 1/4 cents to 5.56 1/2. September corn futures 11 1/2 cents lower at 3.90 1/2. December corn softened 10 1/2 cents to 4.04 1/4. August soybean futures were 27 cents lower at 10.78. November beans closed at 10.40, down 25 1/4 cents on the day. December cotton today was 117 points higher at 72.44. On your livestock's August fat cattle were 25 cents lower at 182.12 1/2. August feeders up 12 1/2, 258.77 1/2, and August lean hogs 2 1/2 cents lower, 88.42 1/2. Go to tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. The best talkers in ag, including you. Join the conversation on AgriTalk. Call us at 855-4TALK-AG.
Welcome back to AgriTalk. I'm Chip. We are in the middle of a conversation with Rich Nelson, Chief Strategist at Allendale Inc. Okay, Rich, we talked about the balance sheet on corn quite a bit there in that last segment. Let's go to soybeans. Stay on the supply side of things here. Trend line is 52 bushels per acre. Your thoughts there? Does that make sense?
I'm fine with that for right now, and we'll have to watch these next 2 to 3 weeks. We may lightly tick that up just a little bit with the idea that this temperature issue here for the Eastern Corn Belt could offset some of the issues on the West. So we'll see about that these next few weeks here.
You know, it seems like we always come down to it, don't we? Is the West good enough to offset the problems in the East? Is the East good enough to offset the problems in the West? It's a battle that I shouldn't say that. It's a conversation that we seem to end up having almost every year, isn't it?
Certainly true, and this is we're in the thick of it, and we can only speculate right now. We don't have good gauges on true yield issues really until we finish with pollination.
Right.
So this is still that mixed time where there's a lot of ups and downs, which could be seen here.
Yeah, we were talking about Drew Lerner earlier at the end of the last segment. He's going to be at your summer conference. That transition from El Nino to La Nina, it was happening very quickly. It seems to have slowed down a bit. It's taken some of the concern about the second half of the growing season for the Western Belt out of the equation, hasn't it?
It has. It has made this from a mainly Argentina issue with some concern about the U.S. forecast. Now it is mainly an Argentina issue and maybe a moderate or minor issue for us in August, if it does show here. So that's definitely a change here in recent days.
Right. You know, on corn, Rich, the attitude ahead of Friday was that it was going to take a problem on the supply side of the balance sheet to get that carryover on the old crop carry under 2 billion bushels. And here we are, 1.8. We got the new crop carryover, the 24-25 down to 2.9 or whatever it was, call it 2.1. Yeah. We've got those carryover numbers moving in the quote unquote right direction because of demand. We've not seen that on beans. What's the holdup?
Yeah, I think for the bean side, especially the demand argument is a big unknown. And I don't like to get on the bandwagon as far as the potential trade war issue, but we can't ignore the fact that new crop soybean bookings are the lowest in 19 years. It wasn't until just this last leg of lower U.S. soybean prices that we began to get a discount back to U.S. pricing for that new crop, all the way up until the first part of early last week. Brazil was beating us during our own time to sell. So I think this lasting concern, not just with a psychological trade war issue, but with the fact that bookings on a factual basis have been quite low, that's still a lagging issue for us.
Yeah. How much longer is Brazil going to be in the game on shipments for this fall?
And that's the question. That is the question. This is obviously the time of year when they should start dropping off a little bit here, but will they piece off another 1, 2, 3 million tons off of what is should be our business and each month? That's a question, and I'm not quite sure if they can do that, but it's an issue. And until we have a La Nina story show up, which is historically more of an Argentina issue, we have some questions right now in the short term here.
Oh, okay. What about strategies, Rich? What do you want growers thinking about when they're looking at their 24 crop marketings?
So that's a real tough story, and especially because in our viewpoint, we are now not just at economic value in terms of price, where we should be based on these stocks to use numbers, et cetera. We're actually now slightly below that based on psychology. So I personally am not too interested in making further sales exactly right now for new crop. Old crop, we just might have to bite the bullet and just get some product moved. But for the new crop discussion, there's still a lot of year left and a lot of movements up and down. We've got interest rate policy changes in September. We've got the La Nina story this coming fall, winter. So I think there will be opportunities a few months down the road for better new crop pricing. But short term, I think we're stuck in a hard place right now.
Okay, so let's be a little patient here. Let's give the market an opportunity to recover before. And when I say the market, I'm talking about both corn and soybeans. Would that be accurate?
Yes.
Okay, give it a little chance to recover in here. Any things just jumping off the page for wheat at you?
So the wheat story is really interesting, and we just learned on Friday that it's not just winter wheat, which is a great crop. We learned on Friday that it was other spring, that the spring crop is much better than expected. So I think that's the issue here for us, a good supply increase. I'm watching very carefully this export market because the world export numbers, the non-U.S. export numbers, we're going to be dropping. We'll be lower this year. We'll have a larger U.S. share of this market, which we've been pushed out of in recent years. Mm-hmm. So I think that's a story for us. We've got the supply in front of us. We've got the ugliest supply numbers in front of us. I think these next few months, we probably will see a more balanced viewpoint as we see further gains on this export side.
Okay. All right. So same message. Be a little patient in here.
Yes. I think I'm not going to say we're at the worst of the worst, but we probably are psychologically here.
Gotcha. Okay. What did you make of the S&D numbers for hogs? I mean, boy, this market is it's not good, and it looks like it wants to get worse.
No, and that's right. We can't find a lasting, sustained story which changes this terrible hog pricing issue. And we missed the cash hog rally, which goes until July. We peaked 2 months before that normal peak. Cash pork peaked out 3 months in front of the normal July peak. USDA right now has the third and fourth quarter with some pretty hefty pork production numbers, 5% over last year. That doesn't exactly match up with that recent hogs and pigs report. So I think that's an issue where we have an avalanche of negative stories, the Maple Leaf story from last week, U.S. plant closures in prior months. So I think this is a tough story, which aside from USDA, I'm not quite sure we're going to see a lot of changes just yet in terms of pricing.
Okay. What is your outlook here on hogs? Are you the market's been under pressure. Is there still room to put some downside price risk in place?
I think there is still I think there's still probably another $2, maybe $3 left for the October and December contracts. I think that'll wrap it up, though, and that will probably move them into far undervalued territory. So I think there's still a little left to scratch out on the downside for these markets. But I do think that once we realize USDA is way overstepping the numbers as far as production estimates, we probably will see these fall and winter contracts ease up with a lot of this concern. So downside, maybe $2 or $3 for the next couple of weeks. But in the grand scheme of things, we probably will not meet USDA's hefty supply estimates.
Okay. And one of the things that has kind of baffled me is why retail pork sales haven't gotten more traction than what seems to be the case. I would have thought that in this economy and with the quote-unquote high-priced beef, that pork consumption would have helped us, eat our way out of this. But it's not happening. I don't quite understand that.
That's a really, really good point. And let's talk about it from a retail perspective, but also, the cash price that's offered to the farmers. That also has a difference from the packing plant down to that level as well. So right now, producers are really struggling to get a share of that retail dollar. Right now, it's about 23%. Prior years, it'd be up to 30, 35%. So I do think we have a lot of concern about the fact that we're still not getting much ownership of that even struggling retail price.
Right. Okay. And then the doggone live cattle futures, they just don't want anything to do with reflecting actual cash trade right now. I'm a little confused by that as well. What's going on?
That sure is true. So we had that massive 45-day rally in wholesale beef prices, $37 per hundredweight added. And we've just now, as of a few days ago, have peaked this market. But the question is, how far are we going to drop, especially with this next drop in supply, waiting just in terms of 2025 showing up here?
Right. Well, and a lot of that has got to be determined by just how far the cash sets back and what Packers can't. I shouldn't say Packers won't compete for cattle out there because they've done that before, but I just don't see them backing off all that much on this cash bid.
No, and let's also point out something that they all know. These next 2 years in front of them, 25 as well as 26, any margin concerns they have right now will pale in consideration with what's lined up here for the future. So they know very clearly that they're in a light loss or moderate loss situation right now. It's going to get a lot worse in the coming 2 years. So that's an issue where I think they're just saying, let's scratch out the best we can, operate as much as we can, because it's going to be tough sailing the next 2 years.
All right. Rich, thank you so much. July 23rd, the Allendale Summer Conference. You can just go to www.allendale-inc.com. Get the details of it there. Thanks, Rich. Appreciate you, man.
Sounds great. Thanks so much. Appreciate it, guys.
You bet. Rich Nelson, Chief Strategist at Allendale. We've got Cary Artac. He's coming up next.
The truth is hard to come by these days, unless you listen to AgriTalk.
Welcome back to AgriTalk. I'm Chip. Great conversation there with Rich Nelson from Allendale. Just a lot of different things to think about. And I think the most important thing that I heard from Rich Davis was when he said, listen, when we run our models, corn, soybeans, wheat have reached the downside objectives. As a matter of fact, are trading a little bit below those downside objectives on some psychological pressure. Let's give it some time. I hope he's right. After a day like today, good grief, 25 to 30 cents losses in soybeans. I hope he's got that right. Okay, Cary Artac, Artac Advisory and wickedstocks.com. Go to Artac Advisory, ARTAC advisory.com. Get a free trial on the commodity outlook, stock outlook at wickedstocks.com. Cary's got a free trial for you there as well. How you doing, Cary?
I'm doing great, Chip. Thanks for mentioning wickedstocks.com. I appreciate that.
You bet. Start us off with Novi Beans. What do you got?
Well, I'm just listening to your commentary, how, your previous analyst thinks we may have overshot the runway, perhaps. Now, that runway for me is 1071, even a 1084. in the November contract. We closed today at 1040, clearly about 30 cents below that area. And so I'm going with this sell signal. I'd love to see the market reject it, rally back, and close above 1084 even. That would neutralize all these big picture downside objectives I now have. 1009 even now expected over the next 2 to 3 weeks. And with today's volatility, we could see it perhaps by the end of the week. 1009 even is a descending channel bottom on the weekly chart that can contain weekly selling pressures. I consider it kind of a braking mechanism on the way down that could slow the descent. But I do see big picture having closed today below 1071 even, a 2-year channel bottom on the November chart does suggest the upper 780s as a longer term objective that I see as a possibility as we move into winter, spring. And if we were to close below 1009 even, selling pressures just continue to build. 1009 even is, by the way, dropping 5 cents a week. So if your listeners want to sort of make a mental note next week around 1004, so forth and so on. And that is an area that can contain weekly selling pressures. Possibly through August, we could get a bounce there back to 1071. But if we close below 1009 even, there's not a whole lot holding this market together. 955. I have these little levels all the way down, stair step, but 788, a big picture objective now, unfortunately. If we can close back above 1084 even at the end of the week, that neutralizes all that. And I would see then 1170 over the next month or two, where we could top out actually through the rest of November contract life. On to August live cattle. In late June, early July, we tested long-term resistance in the August contract, presently 188.80. At that point in time, we told our subscribers this is a great short sale hedge setting area that could yield the lower 170s over the next 3 to 5 months for the broader market. Now, there is a floor of support right now at 181.20. We closed today, August live cattle, 182.12. 181.20 can contain selling actually into August. And from here, we could round back up to 188.80 over the next 3 to 5 weeks. But if we close below 181.20, I see this thing just continuing to fall apart down to 172 even, long-term support. Now, I don't know if the August contract will get as far south as 172 even, but I think the October contract could. The October equivalent, by the way, of 181.20 is 182.80. So if October closes below 182.80, it is also suggesting 172 even over the next month or two, where the broader live cattle market could bottom out through the rest of the year. And finally, last week I did NVIDIA. This week is Tesla. I offer both of these for free on Wicked Stocks YouTube channel. So if you go to YouTube and type out Wicked Stocks, you'll find both our NVIDIA and Tesla analysis. Starting next week, I'll throw out individual stock picks that are not related to the YouTube channel. But in any event, Tesla threw off a significant buy signal a couple of weeks ago when it closed above a one-year channel top that is presently at 205.87. And we've had some real follow-through following that buy signal. 254.25 is the last trade. I am anticipating over the next 3 to 5 months, roughly 327, 328 as a price point, as an objective. We're about 60% of the way there already in 2 weeks. And so if you want to get in on this trade, I see 243.83. That is a rising channel top on the weekly chart that can absorb selling this week, possibly through August. Bullish momentum remains firmly intact above 243.83. I am expecting 297.46 over the next 3 to 5 weeks, and that 327, 328 objective in reach perhaps by the end of September. That said, if we close above 297.46 over the next few weeks, and we certainly may, that 328 area likely within just 2 or 3 weeks, where we could top out through the rest of the year and fall away again from there. Okay. Last thing I'll say about Tesla is if we close the week below 243.83, we fall back to that 205.87 long-term support level within about 2 to 3 weeks, where Tesla could actually bottom out through the third quarter and into later year. I think that pretty much covers it, Chip.
Boy, I'm telling you, that seems like there'd be a whole lot of money waiting for it on a fall down to that 205 level. That's that would be considered a value buy based on everything else that I've been looking at it for sure. So good stuff, Cary.
Thank you, sir. I appreciate it.
Thanks, buddy.
You have a great day.
We'll talk to you next week.
Take care now.
Yep. Cary Artac, Artac Advisory, wickedstocks.com. National Weather Service 6 to 10 day outlook.
I like this.
Has
this
above I get you. Above normal temperatures are expected in North Dakota, northern half of South Dakota, the Red River Valley, and below normal temperatures are expected through southeast Nebraska, Kansas, Iowa, Missouri. Southeast South Dakota, all of Nebraska, Kansas, Missouri, Iowa, Illinois, and Indiana. Below normal temperatures expected in the southwest as well, Oklahoma and Texas. Below normal precipitation in the Red River Valley, North Dakota, most of South Dakota, and western Nebraska. Near normal precip over the rest of the Corn Belt. Above normal precip in the southern belt, southeast belt in particular. And then in the extended outlook, this is for July 23rd through the 29th. The above normal temperatures start to move in from the north, push the below normal temperatures a little further south. Kansas, Missouri still in that. And then kind of the same weather trends on the precip. Thank you so much for listening today. Come back tomorrow morning. Chris Bliley from Growth Energy, Alan Hoskins from American Farm Mortgage here on AgriTalk.